One thing I care way more about than anything else in the world, more than any kind of money, I don't care about investments. What do we even need money for? What do I care how much money I have? Well, I only need money if I have freedom to use it. That's the most important thing. If we live in a prosperous world.
Welcome back to the show. Today's guest is somebody I'm really excited about. Mark Moss talks about a lot of the same things, and we're going to dive deep into what is going on in this country when it comes to your money, when it comes to politics, when it comes to your cryptocurrency that some of you are so deeply involved in. We're going to dive into all these. So Mark, welcome to the show.
Yeah, thanks so much. Pleasure to be here. Excited to dive into all these topics.
Well, these topics are going to be epic because there's timely, a lot of things melting down right now. I mean, for anyone that hasn't been living under a rock, you can see what's been happening really since 2008, but specifically since the pandemic. The government had the perfect reason, not so much the government, but the Fed, to print 5.1 trillion. So now that puts us at about 10 trillion in new money's printed, and everybody.
Now, who's keeping track, right?
No one. That's, I don't know if that's the problem or that's the plan, but no one's keeping track. But what is important is that Americans do not understand what that means. And really, I have been talking about the storm coming, but we're already in the storm. Like, the storm isn't coming anymore. It's here. People just don't yet know it. And they're definitely not prepared. So let's begin just a little bit with, let's start at the pandemic. The pandemic happened. They shut everything down. The whole world shut down. And the Fed opened the printing press up and just started trading dollars for bonds with the US government, creating this awesome environment we live in now where everybody feels rich, but nobody understands what wealth is, and it's soon going to be stripped from them. So what's your take on the current environment of what the Fed just did?
Well, I think my take on that, if we start from a super high level and then we'll drill down into it, but really it's all a result of central planning. Central planning always fails, always. A few people do not know what's best for millions or billions of people. Humans, as really driven by Austrian economists, economics, and human action. Mises wrote the book Human Action. Humans are human. We're irrational. We want different things. We have changing wants, needs, desires. We're all individuals. We can't be boiled down to a line item on a spreadsheet. And so that's what central planners try to do. And so then they try to plan these situations that they always end up failing because they don't have enough data. So going back to the pandemic, where you want to talk about, it wasn't, in my opinion, it wasn't the pandemic that was the problem. It was the reaction to the pandemic. It was them trying to manage the pandemic that became the problem. And it created a massive problem from a bunch of different standpoints. And we can talk about socially and culturally, politically, obviously financially, we're talking about right now. And so, forcing businesses to shut down and then trying to make up that hole. So the opposite of Austrian economics would be Keynesian economics, which is what most of everything that we see today in our policy. Well, it's everything we see in our policy today. It's everything that's being taught in colleges today. And Keynesian economics basically believes that the government can just print the money to fill those holes, or maybe it's kind of morphing into this MMT, modern monetary theory. But Austrian economics would believe that if we have a hole, so we shut down the economy, so now we're losing $1 trillion. Well, if we printed $500 billion, we could hopefully get that $1 trillion worth of growth back. So there's a fallacy there we could talk about, but they didn't just lose $1 trillion and print $500 billion. They lost $1 trillion and then printed $5 trillion.
Yeah, that math isn't quite adding up.
And what we've seen, and we can see it more evidence just in the last couple of days with some of the words that Jerome Powell, well, both we've seen in the last several weeks. We've seen Christine Lagarde, head of the IMF. We've seen Christina Georgina from the IMF. We've seen even Jerome Powell just this week, all basically saying, even Janet Yellen said, we didn't think about the unintended consequences of printing all this money. We didn't think about that. Kristalina Georgina, the head of the IMF, said, we didn't think about it. They all laughed. She said, I guess you could say we're sort of like a bunch of 8-year-olds playing soccer that don't play the field. We just run towards the ball. So she said, we're like 8-year-olds. That's what she said. This week, Jerome Powell said, I guess we found out how little we do know about inflation. So they know nothing. And so what they're doing is, instead of operating with the skill of a surgeon with a scalpel, they're just in there with a hatchet. And so, the problem over the last several years or decades is that, well, the problem for them is that they weren't able to get inflation to 2%. They couldn't get the inflation. They couldn't get the inflation, which why would we want inflation? Why do I want my wealth to disappear every day, every year? But they couldn't get what they wanted of 2%. And so then it went into, we can't get it. We can't get it. 2018, we couldn't get it. 2019, we couldn't get it. 2020, finally they said, we're going to, quote, let it run hot.
Yeah, I remember that.
We're just going to overshoot the target. We can't, we have no skill to get it to 2%. So since we can't get it to 2, we're just going to go as fast as we can. And we know we're going to overshoot the target. Well, holy crap, they overshot it to almost 9%. So they have no skill. They have no way to do this. And so now, and then it was, we weren't thinking about raising rates. And then it's not a problem. We can't get it. Then it's transitory. And then, oh crap, it's a problem. And now it's like, oh shoot, we don't know what to do about it. And now just this week, Jerome Powell said that just as much, we don't know anything about inflation. We found that out. And he also says, but we're committed to getting back to 2%. Well, if they couldn't go up to 2% and we ended up at 9, now they're trying to crush us back to 2. Where do you think we end up on the other side?
Well, Mark, let's stop. Let's go deep into that, because that brings a really important part up. And that is Jerome Powell, the Fed, they are committed to bringing us back to 2%. They have vowed that they will go to any measure to bring us back to normal inflationary numbers. Now, that's all good and great that they say that publicly, but do Americans know what that means? If they look at the Fed's past in history, the Fed's attempted this, never to this level, but every time they've done it, they have resulted in a deep recession. So to get back to that level, the path through it, if you will, requires them to destroy the markets, destroy every person listening to this, their investments, their 401ks, their financial futures for that matter, if these people don't get ready, and also do it at massive measures, 95 billion a month, seven rate increases, which we thought were going to be 0.25%, but now we're looking more like 0.75%.
Yeah. So it's insane. I want to read a couple quotes to first off open this conversation up before we dive into it. I like to get this perspective right before we actually dive into the specifics. So a couple of things. So first of all, you said, does the average person understand what 2% inflation means, and can they get that, and how far will they overshoot that? And do they understand the destruction that could happen in the economy to get to the 2%? So we're going to talk about that. But before we do, what is inflation? What does 2% inflation even mean? Now, as I said, all economists today, all mainstream economics is based off of Keynesian theory. And so I put out a tweet, I don't know, several weeks ago, a month ago. I said, the greatest trick the Federal Reserve ever played was tricking people that we always need the money supply to expand, and that your assets going up in price is a good thing. Those are two big tricks. So everybody coming out with a PhD in economics today thinks that the money supply has to expand. We need inflation. Okay. So they want 2% inflation. What does that mean? What that means is that your money, your savings, your life, your energy that you're storing, you've expended energy, and you're storing that energy in money that you hope you can spend at a later date, so you don't have to expend that energy. That is leaking or losing 2% of its energy on an annual basis. 2%. So your money is guaranteed to buy you less and less goods every single year. You work really hard, you put it there, and then it just keeps doing, it's a melting ice cube, as Michael Saylor would say. Now, a couple of things about that just to kind of open this up. So Ludwig von Mises, head of the Austrian School of Economics, argued 100 years ago into something that he called the crack up boom. And I'm trying to find the exact quote, and I can't find it real quick, but I can basically recite it off the top of my head. But the crack up boom, he says, but then suddenly the people realize that inflation is both intentional and permanent. So people are starting to wake up to this today. Wait a minute. You mean they want inflation? But doesn't inflation steal my purchasing power? So he says suddenly people wake up. So they're waking up to that. They realize that inflation is intentional and permanent, which it is. And then they start to lose faith in the money. They realize that holding the money is buying them less and less goods. So they're trying to then trade it as fast as they can for other goods. And then the whole thing starts to fall apart, which is where we're at. So I want to read that quote. The one other quote I want to read you, and then we'll dive into the specifics of this. And this is Vladimir Lenin, who's responsible for tens of millions of deaths in the Bolshevik Revolution. He said that the best way to destroy the capitalist system was to debauch the currency by a continuing process of inflation. Oh, back to this 2% inflation number. The best way to destroy the capitalist system was to debauch the currency by a continuing process of inflation. Governments can confiscate secretly and unobserved an important part of the wealth of their citizens. By this method, they not only confiscate, but confiscate arbitrarily. And then I'm going to skip to the last part of this. And he says, as inflation proceeds and the real value of the currency fluctuates, the ultimate foundation of capitalism becomes so utterly disordered as to be almost meaningless. And here's the best part. And the process of wealth getting degenerates into a gamble and a lottery. So we were talking about a bunch of different things before we started recording. I was talking about all this leverage that's built up in the system. We're seeing the great unwind happening. It's a gamble. Because of this inflationary system, everyone's been pushed out, and we've destroyed capitalism. Per Vladimir Lenin, he wrote this in 1919. And the process of wealth getting degenerates into a gamble. That's where we're at today. So
yeah, he created the playbook that they're living and doing today.
Yeah. So I wanted to set that up, and that's what 2% inflation is. This is what we're living. Now back to the question. We way overshot to the upside. Now can they overshot to the downside? So the first thing is that the Fed has no control, right? They have no control. The market is not a motor or an engine that can be built and managed. It's made up. It's organic. It's made up of, in the U.S., 330 million people, and we all want different needs and want different things at different times. And so what they can do is, with again, not the skill of a scalpel, but the blunt force of an axe, they can just try to hatchet through things. It's super simple. They try to make it so hard that people don't understand it. It's super simple. Prices have two levers. That's it. Supply and demand. That's it. Supply and demand. So if gas prices are way too high, or food prices are way too high, which are the two big things that Americans can't afford today, you have two ways that you can help. One, we could increase the supply, or two, the scary thing that the Fed has said out loud is we destroy demand. And
with
so
an ulterior motive of, it seems like they're destroying demand because they're trying to push an initiative to electric vehicles, which the infrastructure can't handle if they get their wish anyway.
Yeah. And that's why having a conversation about inflation, specifically on 8% or 2% or minus 1% or 9%, whatever, is completely ridiculous. And it's kind of a waste of time to discuss that, because there's trillions of prices in the market today, trillions. And there's trillions of inputs that go into that, and trillions of reasons why those prices might go up or down. And they all affect us differently based off of what we're all buying and selling. And so to think that the Fed with an interest rate can control trillions of prices with trillions of inputs affecting trillions of people it's complete hubris and ridiculous. So to your point, gas prices, they're going up because we have a lack of supply. Okay, there's that. But then maybe there's also policies being put into place to push an agenda, to the point that you're making. And so under the Austrian economics view, inflation is always a monetary phenomenon, like Rothbard says. But so inflation would be the increase of the money supply. Prices going up are some of the results of that. But today we measure CPI, consumer price inflation. That's prices going up. And that's not in the real Austrian sense of the word inflation. But if we look at just asset price inflation, then there's all types of things. So government on its own causes prices to go up because they put more regulations in, which causes expenses to go up and prices go up. So to your point, there's a bunch of things going on. And as a matter of fact, I have this pulled up right here from this morning. At the time of this recording, obviously this morning, from the White House. It was on CNN, and they said U.S. drivers are going to pay more for gas premiums as long as it takes. Hey, the people are feeling the pain. They can't do this. They said it's all for the new liberal world order.
New liberal world order. That just sounds awful. But they don't even hold anything back. Back in the day, they would just keep this stuff behind closed doors. Now they spew anything they want to say, and they actually tell us that they're going to destroy everything that we love, and they're doing a good job.
Yeah, it's pretty scary when you start hearing that quiet part out loud, as I like to say. So it's one thing if they're lying to you, which then maybe you go, well, are they incompetent? Are they liars? But when they're actually just telling you, hey, our goal is to crush you so you don't spend any more money and you transition away from this, then it's like that becomes real scary. And that's where we're at.
It does. And one of the other things I really want to talk about is your history, because a lot of the people that I come across, like I'm getting older. I'll be 45 this month. So I've ridden a bunch of recessions. I've been a financial advisor through the Great Recession. I became a financial advisor right after the dot-com crash, but I was a business owner prior to that. Through that, I've seen the impact of recessions, two different types, the dot-com and the Great Recession. But a lot of the listeners and a lot of the people you and I talk to, all they've ever known is good times.
Yeah.
We've lived in a time where all it's been is a bull market. It's just everything's become easy to make money. Real estate investors don't even have a freaking clue what's about to hit them. They just think, oh, I'm just making money. It's easy. There's nothing easy about making money. You've just been lucky because you've been in a period of time that is, I don't know if I'm going to say it's unprecedented, but very unusual, because we have a government and we have policies and we have the Fed all pushing to manipulate what should happen organically, which would be Austrian economics. And I don't think we'll ever get back to that, which is a shame. I'm glad insurance companies still abide by some of Austrian economics instead of Wall Street and banks. But getting back to the main point is, how is it that the Americans and the people that are in this whole mess are going to come out of this thing if they truly don't believe that this thing is going to happen? Like, how do people prepare for this?
You know, I haven't been to AA, but from what I've heard, like admitting you have a problem is the first step to like overcoming it. And so the first thing is they have to realize, like, holy crap, we have a problem. We should do something about it. So that's going to be the first step. Right. And I think that's what you're trying to do. That's what I'm trying to do is like, hey, look, everything that you're seeing is not what's really happening. Here's what's really happening. And so I think that's the first step. But to your point, you're absolutely right. I'm actually 2 years older than you. So I've also been through those same markets. So, I started my career buying bank-owned repos in Southern California. And so the real estate market only crashed one time in California from 89 to 92. And in 1995, 3 years later, when I got started, the banks were sitting on all these real estate properties that they couldn't get rid of. The houses were thrashed, they couldn't sell them, et cetera. And so I made my start coming out of a big crash. And then I invested through the dot-com boom and saw the dot-com crash. I started an e-commerce business in 2001 at the bottom of that dot-com crash. So I got one big growth spurt coming out of the real estate crash. Then I started e-commerce business in 2001 at the bottom of that market. Unfortunately, 2008, I got blindsided and I got wiped out. So that sucked.
Mark. We all did.
But then I was able to build back up through that. And so, I have the hindsight of some of this. But I would say that even though you and I are old enough to have gone through a few of these bear markets, we've actually been in we've been in the longest long-term secular bull market, right, in history. But I would even argue that since in the last 50 years, we've also been in this, because 50 years ago, we severed the ties to the gold standard and we've been in this great monetary increase, right? So really since 2008, but really since 1971, I mean, we've created $300 trillion in 50 years. And so even though we might go through a 5-year or 7-year dip, the markets would keep going back up. But what if that regime changes? I mean, at some point, they just can't keep printing trillions of dollars or hundreds of trillions of dollars from thin air. At some point, the law of diminishing return kicks in. So like, look at the bubbles, right? You remember back to 2008, the global financial system melted down, the whole thing. And the United States government had to create a TARP package for $700 billion. And at the time, if you remember, it was like, no, you can't.
Yeah, that was precedent. Like, our kids, grandkids are going to be paying
$700 billion. No, it's going to ruin everything, right? That was 700 billion. Today, we throw that around like a shrimp on a Barbie. Like, we're sending that to Ukraine, like, big deal, right? Like, today it was 7 trillion. So what is the next one? Is the next one 30 trillion? And what happened? And the thing is that people misunderstand. Most people don't understand what money is, right? Money isn't wealth. And you made the point when we opened up, right? Money isn't wealth. Wealth is goods and it's a means of exchange. Wealth is goods and services. So we need the goods and services to expand, not the money supply to expand. So when you create more money, but you don't create more goods and services, all you're doing is making the money worth less and less. So it's not doing anything. And so then it begins to have diminishing returns. And people would like to say that, well, the government has guns, and so people always use the money. But Venezuela has guns, and people just throw the money on the street. Nobody even picks it up. Right. In Sri Lanka today, they have guns, but it's not helping. helping them get gas. And so I think there's a law of diminishing returns. But I guess back to the question you're kind of asking, like, what should people be looking at and how should they be preparing? So while I'm certainly one to look at problem here, look at problem here, look at problem there, it's not always doom and gloom. I believe there's always opportunities. And so I learned early in my career that there's no such thing as good and bad timing. It's just good and bad strategies. Just got to adjust your strategies. But I think one, now is the time to manage your risk properly. I'm building my cash positions where we've been over the last 10 years. Ray Dalio's, cash is trash kind of a thing. Get rid of all your cash.
Yeah, and I disagree with that wholly.
Well, it has been, he's been right. If you were holding cash 2 years ago, you lost 30 or 40% of your purchasing power. But, as we go into a deflationary cycle, it completely changes. And that's where you have to change your strategy. So today I like holding cash, right? So a couple of years ago, I think he was right. Cash was trash. Today, I like holding cash. And as a matter of fact, I'm trying to increase my cash holdings right now. The other thing is back to good and bad strategies. You have to realize that different things in the market are changing. So for example, obviously we saw growth stocks, tech stocks roll over and crash super hard. But really what happened is the market was rotating. And so if you understand like these policies they're putting into place. So for example, we talked about the gas. They're in the United States and globally, they're actively putting policies in place to reduce the supply, but we still have the demand. So what happens to the prices? Well, we could see oil go to $200 a barrel. Easy. We could go to $300 a barrel. Most likely at some point, uranium's going to be it's inevitable. So like investing into those things today could be great long-term investments when they're still hated right now. And so I think you just have to look at the market, see how it's shaping up and adjust your strategy for that.
I like that. Now back to the thing about cash is trash. Ray Dalio, I follow everything. I've read every one of his books except for the debt crisis book, because they're all beasts and they are. It feels like a lifetime to get through them. But when you get through them, you feel enlightened at the end. And the other thing I do is I follow just about every other economist out there that's doing it, from Harry Dent Jr. to all of them. But they all say things that are very important. But the problem is, the average person, you and I fully understand that. We can get through it. We can see the importance of each piece of what they're saying. But the average person might hear something that was said a while ago by Ray Dalio, cash is trash, and they hold that as the gospel. And then they say cash is trash because if I hold it, I'm losing 8.6%. But cash could provide the opportunity for you to take advantage when prices go down, when prices start to deflate, which is going to happen.
Right.
It's already happening right now, as a matter of fact. But I think the problem is when someone hears something, they don't forget it and they just ride it out. And that means they then go to risky assets, keep driving the bubble. And then all of a sudden, when the whole thing lets loose, they wonder why that happened. I did what they said, but no, you didn't do what they said. You just didn't listen to it and understand it. So same thing with Warren Buffett. Not long ago, when the market had its first pullback and then it kind of came back, Warren Buffett was buying. And he went public saying that. And everybody, my phones lit up and we were getting tons of things on our lives saying, is this the opportunity? Is this the bottom? Should we buy? Warren Buffett's buying. He's playing a different game than just about any American can play. So how do people sift through the noise from people that absolutely know what they're talking about? Ray Dalio is one of the greatest minds right now. And, but people just don't understand how to listen to that and actually apply that knowledge. What would you say is the best way to do that?
Well, you're absolutely right on the piece of people not understanding it. And something that I'm really been spending a lot of time thinking about and talking about is that people today, most people, and to stereotype everybody, they're lacking the nuance. They think everything, a lot of people think very linear. Like I talk about Bitcoin and Bitcoin crash. I hope you lost everything you bought Bitcoin. It's like, did I say I was putting 100% of my money into Bitcoin? And did I say that all of my performance was based off the last 6 months? Like I've been holding for 7 years. There's no nuance to anything, right? So cash is trash. Well, do you understand the nuance of why cash is trash? Or Buffett hates gold or Bitcoin. Well, do you understand why he says that, right? And so what's the nuance there? And of course, the nuance helps you adjust for things like this so you don't get stuck on a narrative like cash is trash. But it's also, as an investor, somebody who's trying to, let's just say, survive what's happening to us, that nuance is our edge. Understanding those little differences and understanding how to take that information back and forth. And so I think to your point, you need to kind of look at these different experts and understand what they say, but you really have to take the time to kind of dig into what they're saying, try to understand the nuance that's in there. And then, one thing that I talk about, obviously with Austrian economics, is trying to understand things back to like what we call like a first principles level. Because when you can understand it down to the first principles level, it allows you to then build your own ideas and formulations off of that, as opposed to just repeating headlines that you don't really understand.
Well said. I want to take this as an opportunity to pivot a little bit. We've talked a lot about economics, and we've talked about money supply, and we've talked about inflation and the Great Reset. But let's talk about something that, God, everybody was a guru in not long ago. Now on TikTok and all the other channels, nobody seems to want to talk about it, and that is cryptocurrency. But you talk about it a lot. You have lots of interviews, what Bitcoin did, and so on. So let's dive there, because to me, I've not been in Bitcoin as long as you have. I've been around it, but I was a late adopter, if you will. But I'm just an old Wall Street guy. So I trade levels, support and resistance, and I've done very well. Bitcoin has actually been the easiest darn thing to trade levels on compared to any stock I've ever seen. But people want to buy things when they're going up because it feels good.
Yeah.
I remember when it was around 50 to, when it got up to around 60s,
Yeah.
people were like, that's all people talked about. Now
Yeah.
I'm thinking, I'm out. Like,
Right.
I don't want to be at these levels. There's nothing to support these levels. And sure enough, then it fell back down into its ranges and it's played. But let's just have a broad discussion about Bitcoin and cryptos, because it's a vast topic. I only talk about Bitcoin and Ethereum, but there's a lot of, I call them shit coins, but there's a lot of things out there people can invest in. NFTs are a hot topic. So where would you like to start on the Bitcoin or the crypto?
Yeah, so we'll start at a high level, then we can dive into it. So I think, first of all, just real quickly, my background a little bit. I've already said, I started buying bank-owned repos when I was 18 years old. I've been a full-time investor. I invested through the dot-com boom, started e-commerce business, Fortune 500 exit. So I've done all that. In 2015, I started buying Bitcoin. When I realized that we finally had a tool that we could actually win with, and when I say win, so I would say, as I said earlier, people have a misunderstanding of what money even is. And so when you don't even understand what money is, what it's used for, how it works, people think they do, but they don't. And so then they don't understand the financial system that we have. They don't understand the problems that we have in the world. And I would just say that if we had like this giant oak tree with 10,000 leaves on the top, every one of those leaves would be representative of a problem that we have in society today, from people politically divided to what's going on with kids with the schools, to our healthcare system and obesity and divorce rate, incarceration rate, and obviously those things. And and that tree at the bottom, at the base, at the trunk, or the roots, is the money printer. The creation of all this money distorts everything, and it creates almost every problem we have in the world, which is why we say fix the money, fix the world. Now, a lot of people have been onto this for a long time. Of course, Ron Paul started the End the Fed movement, and we have the gold bugs out there, but gold failed. Gold doesn't work today because we're in an information age. Gold worked in a physical age. We're in an information age today. And so we need to fix the money, fix the world, but how? How do we do that? And so when I finally got into Bitcoin, I said, finally, we have hope. Finally, there's a way. So there's that. Then, however, I did go down the crypto rabbit hole, and I started writing a cryptocurrency research newsletter. From 2016 to 2019, I published a research newsletter. Every month, I would put out 25, 30 pages of research on different projects, decentralized exchanges or privacy coins, you name it. I personally researched and published over 1,000 pages of research on all the different crypto projects. And in 2019, I decided I'm done with this, because it's all smoke and mirrors. It's all snake oil, and Bitcoin is the real revolution. And what do I mean by that? So I don't mean that you can't make money on those things. People would listen to this and they're going to say, what do you mean, Mark? I made a lot of money with Cardano. That's good. I'm not talking about that. What I'm talking about is, if you look back through the long limbs of history, you can see that what changes history for thousands and thousands of years is technology. When new technologies come out, they change the balance of power, and that's what changes the world. So, for example, we went from the world changed when we went into the age of knights and kingdoms in about 1000 AD. And what changed that balance of power is that they invented a stirrup to get on a horse. Now, all throughout history, through the Roman Empire, etc., they used to ride horses bareback, and there was no saddle or stirrup. And so they'd ride the horse to the fight, but then they'd get off the horse and they'd fight. When they invented the stirrup, it allowed a knight with full armor and gear to get on that horse and stand up on that horse. And now he could battle from a horse, and he could take out 100 peasants or serfs. That changed the balance of power. But then we had the gunpowder revolution in the 1500s, and now a peasant or a serf with a gun could take out 100 knights. So we can see that. Now there's a difference of a technology, like a phone. We take a computer and a phone, we put them together. That's cool. There's a technological revolution is something much different. There's two main characteristics. One, it changes the course of humanity. And 2, it drives financial markets. There's only been 5. We're in the 6th one right now. There's been 5. The Industrial Revolution. All of humanity, we had manpower, horsepower. Now we had machines that could do the work of 5,000 men. It's pretty crazy. That freed people up to work on new things, which then led to more inventions. We had the next technological revolution was steam engines and railways. All of humanity, we could walk and carry stuff. Now we had steam engines that could move stuff across continents. That was pretty revolutionary. Then after that, we had electricity and steel. I don't have to tell you how revolutionary that was and how much that changed society. Then we had oil, automobiles, and mass production. So all of humanity, we walked and rode horses. Now we could drive. That was a pretty big deal. 1971 was the age of the microprocessor, which brought us personal computers, telecommunications, the internet, Zoom like we're doing right now. 1971 plus 50 years puts us right here today. We're witnessing another technological revolution. And what's happening is most people are completely oblivious to this because cryptocurrencies are blinding them to what the real revolution is. And that real revolution is decentralization. Yes. That's the real revolution here. So now, just real quickly, I highlighted all those changed humanity, but they also drove financial markets. What's driven the financial markets for the last 50 years? Telecom, internet. What drove before that? Ford, GM, GE. What before that? Steel, oil. You get my point? So we're witnessing another revolution. And so we're so blinded with NFTs and crypto this and DeFi that we're missing that there's an actual real technological revolution happening right here. And so that is decentralization. So, and that's Bitcoin. Now, why decentralization? Why Bitcoin? So what does decentralization even mean? Well, we have centralization. So all the internet started decentralized, but then it became very centralized. So nobody wanted to run their own servers. In 1999, I started an internet business. I was going to get super rich. You put a .com on anything, you just crushed it. I was in Southern California, like I was going to make it so big. And at the time, I was starting me and my buddy, we started a company that you would get rewards back from online shopping, and you could give them to like a charity of your choice, which you see all over the place today, but in 1999, there was nothing doing that. But my point of the story is that at that time in 1999, I had to build a server rack in my office with RAID, hot 5 hot swappable hard drives and this whole thing, because there was no such thing as cloud hosting back then. And nobody wanted to run their own servers and all that. And so the internet became very centralized. And so Google now has all your data centralized, or Facebook is centralized, Experience centralized. But that's created all types of problems that we're seeing today. So now, instead of having one centralized database, the goal is the revolution is decentralization. So the decentralization would be the opposite. Instead of one database that you can't control, they control, it'd be millions of databases that you can control individually, which is what gives us the decentralization. And so that means in order to achieve decentralization, that I need to be able to run a database and you need to be able to run a database. Someone in Africa needs to be able to run a database. So currently, someone in Africa on a 5-year-old laptop can run the Bitcoin database. You can run the Bitcoin database, but you can't, maybe you can, most likely you can't, I can't run a database, a node for Ethereum or Cardano or Solana or fill in the blank. So the revolution is decentralization, and there's one cryptocurrency that gives us that. Now, if we go into the price, I don't know if you want to stop there. We can go more into the price.
Keep going, because we got to get to the point where the opportunity lies. And I think you're already saying it, but I want that. So
then if you and I were in Silicon Valley a decade ago, and I'd said, hey, I have this new app, and it's going to help me get a car, and I want to see if you want to invest into it. You're like, you mean like a phone where you call a taxi? I'm like, yeah, it's kind of like a taxi, but you can get different cars and this and that. You're like, okay, well, how much is it worth? I'm like, it's worth 100 million. You're like, dude, Mark, you're out of your friggin' mind. Where do you get 100 million? Well, look, if I can get, the taxi industry is this big and the limo industry is this big and van share is this big. If I get 5% of each of those, I get that valuation, right? So that's how it'd be done. So we have this decentralized revolution happening. Not everything needs to be decentralized. That's a controversial take. Not everything needs to be decentralized. What does? Money certainly does. That certainly does. We don't need the Fed creating booms and busts, printing and pulling back all the time. And so, okay, what markets could Bitcoin disrupt? Well, Citibank and JP Morgan says it's going to overtake gold. Gold worked good in the physical age. It doesn't work good in the information age. So could it overtake that? That's $12 trillion. Okay, that's a 24x upside just from that. What about, they say it's like a Swiss bank account in your pocket. We know that those Panama Papers that came out a few months ago, all these people use these offshore bank accounts to protect their money. But now today, Russian oligarchs are getting their bank accounts seized. They're not really that good. Well, there's $40 trillion sitting there. Okay. So it's definitely a better version of that. What else? Well, let's see. We have 100 trillion of currency. We have 120 trillion of bonds, which of almost 20 trillion are negative yielding. That doesn't make any sense.
None.
We have $324 trillion of real estate. So these are all reserve assets. So if we add that up, it's about $700 trillion of just reserve assets. So could Bitcoin get 5% of that? I mean, it's certainly better than offshore bank accounts and gold and whatever. Could it get 5%? Okay, so that's 36 trillion. Divide that by the 21 million. That's 1.7 million per Bitcoin. So that gives me an 80x upside from where we're at today. An 80x upside. Now, could Bitcoin go to zero? Sure, right? You're a trader, you know that. Could it go to zero? Sure, 100%. So it goes a 1x downside with an 80x upside. Yeah, those are pretty good odds. Now, does it mean it's going to go to 80x? No. Does it mean it's going to go to zero? No, not either, right? So you have to figure out where you're at there. Now, the market is pricing it in. So it's $20,000 today. And it's, so let's say it has a future valuation of 2 million per coin. So that means the market is saying that it has a 2% chance of achieving that. I think it's higher than that. I think the market's mispriced it. Now, does it mean it's going to get there tomorrow? Of course not. But I think it will get there eventually. And so I think it has a much higher chance than 2% to get there. And if you do, then why don't you have 2% of your net worth in it? Now, then there comes the next thing, which is the evolution process. So technological revolutions take time. And so there's something called the diffusion of innovation. And it shows how long it takes a new technology to reach mass adoption, which is typically about 80% of the population. So you can look at how long it took for telephones or color TVs or washer and dryers to get to 80% of the population. And each one comes faster. And we use an S-curve to model that. And the way an S-curve works is the time it takes to go from 0 to 10% is about the time it takes to go from 10 to 90%. And it works again across all these different technologies. Just because Bitcoin is super volatile today and it's not the best medium of exchange, nobody should be saving every single day, like saving their rent in it because it's volatile. You don't know how much it's going to be worth next week. So it's not the best form of money today. I'm going to agree on that, but it doesn't mean it won't ever be that. Just like when I invested into Uber, well, I didn't invest in Uber, but in that hypothetical example, if you would have invested in Uber, it didn't mean the very next day or the very next week or the very next month or the very next year, Uber was going to be the dominant rideshare app. It didn't mean that. It needed a decade to grow out, right? So Bitcoin was a collectible. It was like interesting. It was fun. It was a collectible. And then on the evolutionary path, it went from a collectible, and then on an evolutionary path, things become a store of value. So we see the rich today, they store a lot of their wealth in fine art and cars and things like that. So collectibles become stores of value, right? And then if the store of value gets enough momentum, it can evolve. Doesn't mean it will, but it could, especially if it has the attributes of money: portable, divisible, durable, recognizable, fungible, etc. It could go from a store of value to a medium of exchange, and then it could evolve to a unit of account. So we're in that evolutionary process. If you and I were walking through a forest and we saw a little tree this big, and I'm like, dude, check it out. That's an oak tree. Can you believe that tree is going to be that big one day? And you're like, no way, that's stupid. Look how small that tree is. It will never be that. I'm like, no, it's an oak tree. It could be that. So there's like this process. Doesn't mean it's that today, but it has the attributes to become that in the future. And so there's this evolutionary process that we're in. Now, back to the S-curve technology, we can see in the United States, we achieved about a 10% adoption within the first 10 years. So that means using S-curve analysis, which is, pretty reliable through all these different technologies, that means that we should achieve about a 90%, 80 to 90% adoption by the end of the decade. So I'm not saying today, I'm not saying tomorrow, I'm not saying it's going to be $100,000 by the end of the year, but I think by the end of the decade, it's going to have achieved that level of adoption. And I think we could see it hit those levels in a decade. And if you had to wait a decade to get an 80x upside, if you had to wait a decade to get a 20x upside, would that be a good investment?
Be a great investment.
Yeah, it'd be a great investment. And so that's the way I look at it.
Yeah, folks, like that's one of the best descriptions from top down that I've heard. The only other one I would argue is, and many of you have probably read the book Inventing Bitcoin, but that's a great book that kind of explains to you why Mark is probably absolutely right. In the next decade, this could be a monumental investment for you. Could be a great thing, and it could change everything that we're doing today. But investor sentiment is going to play a part in that. The overall markets are going to play a part in that. Go ahead.
So that's a money side. Look, I can make a bunch of money. Cool. To be honest with you, I don't care about that much. I mean, I want to pay my bills. I need to eat. I need to feed I have a family. I got kids. I care about that. But what I really care about is my kids. What I really care about is the world that my kids are going to take. My grandkids hopefully one day will take. And I'm scared for that.
How old are your kids, Mark?
I have a 13-year-old and an 18-year-old.
Yeah, I have a 2-year-old daughter. It's the scariest thing every day when I wake up and when all the way through till I go to bed.
You know, when the pandemic broke out a couple of years ago, I remember we were sitting at the kitchen table. So my kids were 10 or 11 and 15, 16 at the time, right? And we're in California, super harsh, super gnarly lockdown, right? And it was for them, it was in a very pivotal point of their life for that to happen. We're talking like middle school, right? Or middle school, high school. And my kids were I mean, it was to see what they went through was devastating. And one night we're at the kitchen table and my daughter goes, well, at least we can go outside now.
Oh my gosh.
And that just hit me like a just punch in the gut, right? And so anyway, there's one thing I care way more about than anything else in the world, more than any kind of money. I don't care about investments. What do we even need money for? What do I care how much money I have? Well, I only need money if I have freedom to use it. That's the most important thing. If we live in a prosperous world. Now, the world that we're living in today, my kids want to know why our planes don't run on time anymore. And my daughter's freaking out because they said there's a tampon shortage. And like, they're freaking out, like, why is the world breaking down? The world that they're about to move into is much different than ours. And it's all being driven by central planners who have way too much hubris and they're making decisions that are bad for us. And there's one tool that enables them to build this digital panopticon, a prison for us, the Chinese social credit score system that's coming to a shore near you as fast as possible. There's one tool that allows them to build this digital slavery, to continue to build these central planning policies, to continue to shut down energy, to shut down food. There's one tool that enables them to do that, and that's the money printer. That's it. We take away the money printer, the whole thing falls apart. We go back to a free market system that is what brought all the prosperity that we have in the world today. We need to take away the money printer. We need to separate money and state. How do we do that? There's one choice.
The Fed.
And how do we do that? Well, one of my favorite economists, F.A. Hayek, he's an Austrian economist, won the Nobel Peace Prize in economics in 1974. In 1980, he said, there shall never be another sound of money again until we take the thing from the hands of the government. But he said, it can't be done by force, but rather by a sly roundabout way, introducing something that they can't stop. Whatever. It's a great investment. Okay. It's got an 80x upside. So what? What do I even care about that? Honestly, if it never went up in US dollar value again, I wouldn't care because it gives me a way to store my wealth in a way that can't be seized or manipulated. And if I want to send it to you, nobody can stop it, block it, or prevent it. People don't understand, without the freedom of payments, there is no freedom, period. It's cool. It's an 80x upside. Great. It's a good investment. Sure. Should you buy some? Okay. Yeah. Do you care about freedom? Because if so, maybe stick another look at it.
Very much. And it's one of the biggest things I talk about is taking back control of your money, taking back control of your life. I mean, it's all over my shirt, taking back.
Yeah, I love your shirt.
But the one thing that's interesting is a lot of us don't realize the cost of freedom. Like it's a weird dynamic, a weird time in history. My late friend, Stefan Arniel, wrote a book called Hard Times Create Strong Men, another Ray Dalio beast of a book. And in that book, it talks all about this. And we're on that next phase, folks. Watch Ray Dalio's. We're at the end of a long-term debt cycle. You don't even know what that is, because I don't, because I've never lived it. It's never happened in our lifetimes, but it's going to happen. It's happening right now. Yeah. And all of these things are going to challenge every single thing we do in life. Mark, I got one final thing, and then we're gonna cut this. Offline, before we started, we talked a little bit about what makes the United States of America unique. I always tell people the United States of America is the land of opportunity, the greatest country on earth, but that very quickly can be stripped from us and taken from us. Too many of my friends, I'm old enough to have lost lots of friends that I went to school with and that I was surrounded with in the Iraq War. A lot of people don't know what that cost of freedom is. Well, unfortunately, I hate to say this, but you probably will, because what makes the U.S. unique is being unwound behind us. So can you talk a little bit about the political side, call it the rule of law?
Yeah. Well, you just said what made America great, the greatest nation in the world, was the land of opportunity. Well, what allowed it to be the land of opportunity? Well, freedom, the freedom to pursue our own self-interest, right? That was that created the land of opportunity, freedom. But what allows us to pursue our freedom and pursue our self-interest? Well, a rule of law that protects private property rights. So, in Mexico or in Iran or in Venezuela, they seize your property, they seize your factory. In Venezuela, Chavez would walk down the street and just go, I'll take that business. I'll take that business. He would just take them. And so the United States has a rule of law. And because of that rule of law, that allows us to now incentivizes us to think long-term, to plan ahead, to save, to build. It also attracts people to come to the United States to build and grow. It also attracts investment capital. Investment capital doesn't go to Venezuela because they're afraid that money is going to get seized. And so having that rule of law has been the most important thing, one of the underpinnings of the most important things. And this week I saw it just rattle to its core. And I think regardless of where you sit on policies, because of course we're getting super divided these days, but I think regardless of where you sit, you need to pull back and just think about this for a minute. So like freedom of speech, right? Like I might hate what you have to say. I might disagree 100%. I might even think what you're saying is hateful, but I'm still going to defend your right to say it because I believe that we need that freedom of speech so we can have creativity and we can build ideas, we can find truth, et cetera. I'm not going to go deep into that. But my point is that you need to understand the principle versus where you sit on the actual decision. So what we saw this in the last 2 weeks just shook me to my core. And we saw, the United States has 3 branches of government, right? And so the judicial branch, the Supreme Court, is the highest court in the nation, the most respected institution in the United Nations. The Supreme Court is the final say of everything. And we saw an activist leak information from the Supreme Court. And it wasn't just leaked. I mean, it was leaked information, but on the most divisive issue potentially facing the country today. And so it was done on purpose by an activist on one side of a polarized debate. I'm talking about the Roe v. Wade. Now, I don't want to dig into Roe v. Wade, but it doesn't really matter where you're at. You should understand that when we discredit an institution like that, we're in a bad situation. We're no different than the Congo or Iran at that point. And now the Biden administration is saying, I don't care what they say. We're going to overturn the Supreme Court, right? AOC saying they've discredited themselves. But then it got even worse. So then what the Supreme Court did in this last session is they pulled back a bunch of federal laws and gave power back to the states, which is how it should be. The United States is a republic, 50 independent states. It's not supposed to be federal law for everything. It's supposed to have independent states. That allows for more competition, which creates better product service prices for the people. But what I saw also crushed me was they pulled back a bunch of things, EPA things. They pulled back, but one of the things they pulled back was gun rights, right? And that really messed up the people in California because California wants to be one of the strictest states on guns. And so Governor Newsom and the Attorney General at the Department of Justice in California were super mad about this situation. And they vowed, that's the word they used. They vowed to do everything in their power to go back against the Supreme Court. That's what they said. That was their words. And then just this week, it just so happened that the Department of Justice, again, one of the highest institutions in the United States, the Department of Justice leaked the information, personal information, names, addresses of people who had concealed weapon permits, legally obtained information. And the DOJ just happened to leak it after they got a ruling from the Supreme Court they didn't like, and they vowed to do everything. So, I mean, I'm just highlighting things. You can draw your own lines here. You draw your own dots. And regardless of where you sit on Roe v. Wade or where you sit on gun rights, it doesn't really matter. But when you start to break down the highest institutions, I'm talking about the Supreme Court and the DOJ, the justice. Look, that's the word, justice. When you break those down, we're no better than a third world country. And that's very, very scary for me.
Just gave me chills, folks. And it should have given all of you chills. The next decade is going to be an interesting one. It's going to be one that's going to require you to stand up, hold that torch high, and lead others, because there's too many people burying their head in the sands.
Yeah.
And we've become a weak nation. I hate to say that, but we really have. And it's time for at least the few, the strong ones, to stand up and to really help us through this next decade. I don't know if it's too late, but I'm not willing to quit. Mark, I know you're not willing to quit. So if other people want to find and learn more from you, what is the best source where they can find you?
Yeah, I love what you said there. And I want to just add on to that for a second. I'm hopeful. I mean, I see all this bad stuff and I'm hopeful. I believe we have a tool to win. I believe people are waking up and they're not going to stand for this. And so I believe we win. I'm hopeful for that. However, it's not guaranteed. We have to all get together and we have to do the hard work. I believe we will, but we have to do it. And so I love what you're doing. You know, I'm trying to do the same thing. We're trying to wake up. We're trying to encourage, but we need everybody listening to get engaged. And so on the wall back here behind me, I have a picture that says lighting brush fires. And it's from a Samuel Adams quote that says, it doesn't take a majority to prevail, but rather a small, irate minority keen on setting brush fires in the minds of men. So you and I are trying to start brush fires in the minds of men, but we need every single person listening to this show to take this information and spread the brush fire to the next person, the next person, the next person. That's how we're going to win. Spread the information, do something about it. I'm hopeful for the future, but we have to do the hard work. With that, yeah, so I'm pretty easy to find. You can go to my website at @1markmoss, just the number 1 Mark Moss. I'm super too active on Twitter, and you can find me there, 1 Mark Moss. All my stuff's linked there. And then I do a couple videos a week on YouTube. You can search that, radio show, podcast, etc.
Yeah, folks, the YouTube content is epic. If you follow my stuff, you will love Mark's stuff. So make sure you go on there, subscribe, click that little bell so that you're alerted every time he hits it. You know the drill. You hear me say it every day. Get on his YouTube channel and pay attention, folks, because it's not just your financial future you're protecting here. It's your kids and your grandkids. So wake up, America.
Wake up.
This is the time. Mark, thank you for your time. And thank you for what you're doing.
Yeah, thank you so much. It was a great conversation. Appreciate it.
Absolutely. All right,
so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.